everyone, we're going to go ahead and get started. Good morning, I'm Corinne Miller and I'm the Director of Planning, Art and Activation for the Golden Triangle Business Improvement District. Thanks for joining today's discussion on accounting strategies for small businesses, retail businesses. I'd like to start by thanking M&T Bank for partnering with us on today's webinar, with extra special thanks to M&T's Lakendra McNair. I'd also like to thank Chris Bly with EFS Group for being part of our conversation this morning. Today's webinar is an extension of our Grow Golden program. M&T Bank, along with the Department of Small and Local Business Development and the US and DC Chambers of Commerce, are partnering with the Golden Triangle bid to make Grow Golden a success. For those of you who may not know, Grow Golden connects selected entrepreneurs, including makers, restaurateurs, and creatives in the DC area, with building owners to fill high-profile ground floor spaces in the Golden Triangle neighborhood. The program provides wraparound technical assistance, and selected businesses receive multiple months free rent and favorable terms for extending occupancy. In September, we had the pleasure of partnering with the US Chamber of Commerce to host the first webinar of our technical assistance series, Your Brand, Your Voice, Your Story, Digital Marketing for Small Businesses, which discussed best practices for reintroducing a business, from storytelling and branding to maintaining authenticity and optimizing strategies for different channels and platforms. The webinar is recorded and on our website if you want to find it under the Business Resources section. So Grow Golden is just one of the ways that the bid is working to support our incredible small businesses in the Golden Triangle. For more information, you can follow us on social media, and I think our handles are on one of the slides coming up. There they are. So you can follow and see what we're up to on social media. I want to note that we are recording this presentation. During this discussion, we request that all attendees remain with their cameras off and on mute. If your camera or microphone is still on, I think we're good on this. Please take a moment to turn it off now. This can be done by clicking on the camera and microphone icons. To ask questions anytime during the discussion, select the chat icon, which will open up the chat box on the right-hand side of your screen, and type in your questions. We will answer as many as we can during the Q&A portion. So enough of the housekeeping. At this time, I'd love to introduce our partner, Lakendra McNair, Vice President at M&T Bank and Business Banking Relationships Manager. Lakendra, I'm happy to pass it off to you, and thanks.
Thank you so much, Corinne. I appreciate it. Good morning, everyone. My name is Lakendra McNair. I am with M&T Bank, and I welcome you so much to this presentation. I'm happy to be a partner here with the Grow Golden program, something that's very necessary for our DC economy and our small businesses during this time. I think it's really important to make sure that we bring financial empowerment sessions to our small businesses here in the district, as well as the Grow Golden program, so that we can help our retail industry and climax boom and thrive again. So it was really important for me to make sure I brought the right partner with me today. And so I will introduce, as we start today's conversation. Our conversation today is going to be accounting strategies for e-commerce businesses. And that's going to be really important because your industry is a little bit different. So we want to make sure that we bring the right partnership with the right passion, purpose, and expertise behind that, so that way we can really make sure that we're best utilizing these skills in these presentations for you guys today. So without further ado, I'm going to introduce this dynamic young woman that has been doing great things for other businesses here in the District of Columbia, Chris Bly. Chris, I'll turn it over to you to tell a little bit more about us.
Thank you, Lakendra. Thank you so much for that introduction. I'm super passionate about working with small business owners, women, minorities, especially. Even we have a lot of clients in the DC area, but EFS Group is a group of certified public accountants, and we do everything from bookkeeping and taxes to payroll, budgeting, forecasting, all the things that you never thought you needed in your business, but absolutely are necessary to growing and getting you to that next level. So that's just a little bit about EFS Group. I don't know, Lakendra, do you want to dive into just a little bit about M&T Bank?
So of course, we're the best bank right? I'm always going to give us props for that. But just a little bit about M&T Bank. We are a very community-oriented, small business-focused bank, and I love it here as an employee and also as an advocate in the community. You can see some of the things that's in the slides, but what's relevant and what's important to you as a business is that the heart and center of M&T is small business. We are the #1 SBA lender in DC, and we are thrilled to have a specific group focused primarily on minority and women-owned businesses in our small business community. So you can feel free, you'll have my information at the end to reach out to me if you have any other questions. But for today, I want to turn it right back over to the expert of the hour, Krista Bly.
All right, awesome. So let's dive right in. We're going to go into our overview slide. So during this presentation, we're going to talk about what are financial statements, inventory versus cost of goods sold. What is the difference? What does that even mean? Specific, some e-commerce strategies that really tie into software, and the importance of bookkeeping, which really ties into the fundamentals of capital financing. So I want to just kind of gauge the audience and see if you can type in the chat box, and we'll go to the next slide to say, what is your industry? Industry is important. There's so many things that go into, you know, the seasonality of your business. Some people's, especially specifically retail, Q4 is the season, right? So we see lots of things that are happening. So if you can go ahead and specifically just give us a little bit more information about what type of retail are you in? Do we have, what kind of products? Marker spaces, love that. Okay, awesome. I know we also have Joy as a guest. Katrina, if you could go ahead and type in your industry. Really want to know that because it does kind of help me with the rest of the conversations that we're having. I want to make sure that they're really tailored to your industry and what you're doing. Essentially, there are still blanket things. Oh, new and going in this direction. Okay, awesome. Awesome. So we can go ahead and go into kind of what are financial statements, because no matter what your industry is, you have or should have financial statements in your business. So the three big ones are profit and loss or income statement. They mean the exact same thing. Some people call them one or the other, but profit and loss and income statement is one, balance sheet is the other one, and the statement of cash flows. I'm really going to kind of dive into these. So it's about to be a lot of information, but I promise I will try and simplify it so that we can really get to the meat and potatoes of what are these financial statements. So let's go to a profit and loss example. So if you're joining from a phone or something, this might be super tiny. But if you look at a profit and loss statement, this is going to be a period in time for your business. So at the top of it, we're going to have income, and this is usually tied or directed to the sales or the amount of cash that hits your bank account, right? So you might be collecting cash from markets, and you might be collecting credit card stuff from online. So we compile all of that information and put that into the income bucket. The cost of goods sold is going to be what it cost you to make that sale. So what was it? How did, if you bought your markers, what was that cost from your manufacturer versus how much did you sell it for? So the gross profit from that is just like directly to what makes it to your client, your consumer. The gross profit is just that. So right here, we see a gross profit of $26,000, and then we have our ever so loving operating expenses. And this is important when you're doing your taxes, right? So these are tax deductible expenses most of the time. Some are not, like entertainment is only 50% tax deductible, but for the most part, everything on here is what does it take to operate your business? What is your overhead, as some people like to call it? So we have advertising, that is a business related expense. We have consulting and accounting, definitely an expense that is necessary. We have rent, repairs and maintenance, telephone and internet, travel. Now, all of those things are operating expenses that go directly into your business functioning. So on this profit and loss example, we have a loss, right? So we spent more than we made. We spent $38,000 and we brought in $29,000. So there was a loss of $12,058. I do want to point out, if you have a profit, profit does not mean cash. I think that's the biggest misconception when you're running a business. You're like, oh, I'm profitable, but I don't have any money. Like, I don't have any cash. Like, I'm pricing myself correctly. I'm keeping my expenses low. Where is all my cash going? So I want to take it to the next slide, which is our balance sheet. So the balance sheet shows us the other half of the business that's happening. And this is our assets, our liabilities. So where our cash is going. Sometimes we invest our cash in equipment or things that we can't expense all at once. Inventory is also an asset. So when you buy inventory and you haven't sold it, you don't get to expense it yet. That is an asset. You still have that on hand. You can turn it into cash. Cars are an asset, a business vehicle, that's an asset. Anything that you can turn into cash. Some people, their domains, their URLs are assets. They can sell that URL to somebody and make money off of that. So there's lots of different types of assets and things that you can turn into cash that maybe you've spent money on, but you can't expense. So we won't see that on the profit and loss. Another thing that you may be paying for that you won't see on your profit and loss are liabilities. So these are loans. When you repay back loans, when you pay sales tax, those things are leakage to your cash, but they don't show up on your profit or loss. So you may be like, oh, I have like $30,000 in profit, but all of that money goes to paying back a loan or your sales tax. You're not actually going to see that cash in your bank. So it's really important to look at multiple financial statements to determine the health of your business and not just your profit and loss, which I think a lot of business owners get sucked into. But our balance sheet, again, has our assets, which are the things we can turn into cash, liabilities, the money that we owe people, and then my favorite part is the equity section. So by having a balance sheet, you can say, I have equity. People talk about equity all the time. They talk about assets all the time, but right here, you're going to see what is your equity in the business. And this is where the income statement and the balance sheet cross over. Our current year's earnings, that's going to be where they tie out to each other. So we're going to bring whatever profit or losses from the business and put it right here in the equity section. Previous year earnings, previous year's profits is going to be your retained earnings. And then an important piece is also money that you put into the business as a business owner or money that you take out. So anytime you're running personal expenses through the business that are not actually operating expenses, those are owner's draws. So that's also a way that you'll see cash leave the business without seeing profit, right? So that's really a big no-no and something that we try and stray away from, but it's hard as a business owner. You're like, oh, this is my business, this is my money. But that's not the way the IRS sees it. They see it as this is an independent entity and that money is the entity's money. So when you run personal expenses through the business, you actually are paying taxes on that. When you take an owner's draw, you pay tax. So you're not only getting, spending that money from the business, but you're taxed on it anywhere from 15 to 45% on every transaction. That is a high tax rate for sure. So I won't dwell on that too long, but I want to go into the last one, which is the cash flow statement. And this combines both the income statement and the balance sheet. So when you work for or work with an accountant, hopefully you'll get all three of these. And I think the cash flow statement is the most important because as a business owner, a lot of business owners measure the health of their business based on their cash, especially in the beginning when we're trying to figure out where is my money going and where is my cash. The cash flow statement is going to tell you, okay, well, I got money from my customers. I spent money on inventory, and I spent money on my operating expenses, and then I spent money on sales tax. That's what these top 3 things are in operating activities. So my cash went down by $8,000 from operating activities. Investing activities are going to be like the accounts payables. They're going to be money that maybe you paid to yourself as a business owner, an owner's draw. There are loans, so repaying back loans will come out for payments and investing activities, and that all brings your cash down, right? Sometimes when you receive a loan, you'll see the cash go up because you're like, oh, I got $30,000, so my cash went up, and you'll see that on the cash flow. So all in all, the biggest takeaway on here is just to look at the bottom line. At the beginning of the month, this business had $5,348 in their bank account. At the end of the month, they went into the negative. They got overdraft fees. It was bad. This was a rough month. We've all seen them. But they had negative $4,946. So they had a $10,000 cash flow. This is when they're trying to come to Lakendra and say, okay, I really need help. I need some funding. I'm investing in my business right now. I'm trying to grow it. I'm trying to get to the next level. But it's just not there. Sometimes you need that traction, but these financial statements will help you see that before it's too late. So I'm going to go into our next slide, which is really going to talk about inventory. I know that was a lot of really quick snapshot of financial statements, but again, they're super important. One part I really want to hone in on, especially since we're talking about retail in this space, is inventory. So I see we have some people in the chat. Can you tell me, do you track your inventory in a software? Just yes or no? And how often are you counting your inventory? Are you doing it weekly, monthly, quarterly, annually? And an inventory system, I mean, you can do it pen to paper, that's a system, right? But are you using a software? Are you using maybe your point of service system? Sometimes Square or Toast or Shopify, you know, the point of sale systems, all of those have inventory tracking methods. So are you tracking your inventory? As a retail business owner, it is so important that you do inventory counts, because I cannot tell you how often I have a client that receives a shipment and they paid for 50 and they got 47, right? So every single unit counts when you're running a business. So inventory counts are super important. So just to we'll dive into the next slide, inventory versus cost of goods sold. So they are different. A lot of people think cost of goods sold is how much I spent on inventory. That's not necessarily completely accurate. So inventory is on the balance sheet. We talked about the balance sheet has assets. It has things that we can turn into cash. When you have inventory on hand, it's not cash yet. So really your inventory is an asset. Now, cost of goods sold, or COGS, people call it, I like to call it COGS, this is an actual expense. So when it leaves your warehouse, when it leaves your store, that is an expense to the business. You've sold it, and we get to write off the value of that. So you don't get to write off the sales price. If you wrote off the sales price, you'd never see profit in your life. You write off the amount that you bought it for. So the amount that you purchased, whatever you're selling, that is your cost of goods sold once you sell it, right? I know there's a whole lot in that statement, but it really does help us look at the health of your business and the value of your assets, right? So insurance companies, they're going to ask you, how much is your inventory on hand? Or even if you're looking for lending or going to an underwriter, they're going to want to know what your inventory turnover rate is and how much inventory you have on hand and things like that. And having these inventory accounts is the driver of it. So you need to know how many you have of each product, and then what it costs you per product to get you your cost of goods sold and your inventory and the total value of your inventory. So these things are really important for a lot of reasons, but really to drive, are you even pricing yourself correctly? You know, some people, depending on your industry, they'll say, I mark it up 2 times, 3 times, 4 times, 5 times, but then they give discounts and things like that. So you use all of this information to see in your financial statements, am I actually making a gross profit? Am I profitable off of this? Do I have enough money to operate and to live my life and support my lifestyle? So inventory is very, very important, and kind of understanding both of those things. So I won't harp on that too much. I want to go into e-commerce strategies, into our next slide. So if we, I'm going to use specifically Shopify. A lot of clients that I work with, probably about 95% of the clients that I work with, use Shopify for e-commerce. Now, you can use Shopify to kind of create your own financial reports before you're ready to support an accounting firm to help you out with it. So in Shopify, you can use your cost of goods sold and cost per item and your inventory counts to put that into Shopify every time you have a new sale. So every time you input a new product, you're like, okay, I have a new product or I got a new batch. I'm going to go put the amount in, update my inventory count, and make sure that my cost is good. And then you can pull a few different reports in Shopify to give you your gross profit, which is like a mini profit and loss statement. It's really, really beautiful and valuable. So I'm going to give you just a few step-by-steps specifically in Shopify. They're very similar across all systems. If you're using Square, if you're using Toast, or if you're using something else, most of them have these types of systems. So if we go into our next slide and kind of look at our Shopify, this is our first step. So we're adding a product to our website or to our POS system. In Shopify, there's all products. You go specifically into product and add a product, and you'll go into this screen. Now, so often we are putting in our beautiful content pictures that we put because we had a photo shoot, we got all this great content. I know what I want to price it at, but so often clients forget to put this cost per item in, which is actually the most important part. I want you to know that your customer will not see this. They will never be able to see what the cost per item, and this is for your internal tracking, so you can create some really awesome financial reports using your system. You're paying for this system, right? You're paying maybe $35, $40, $70, $150 a month for this system. Use it. Right? Use it to its full potential and get that cost per item in there. And then there's also a section where you can put in the amounts. So if we go to the next slide, we can see how this goes full circle. When we look in analytics, specifically in Shopify, on the left-hand menu, there's an analytics section, and we go into reports, and there's finance reports, and we can do this summary. So the example for this company is we had gross sales, which is like our income. We had some discounts, we had some returns, so we have our net sales. So right here, this net sales is going to bring over into this gross profit section, which is in the bottom right, and our net sales are going to be the same. And then we have a few that didn't have the cost per item. We weren't perfect, but we were trying to be. And then we have net cost of goods sold. So it cost us $219.48 to make this 1901.73. So that shows me that this company has priced themselves correctly, or maybe they had a lot of overhead or something, so they had to really get a good cost per item, and it shows the gross profit. So right here we have a financial statement from Shopify. There's so much in here. We have gift card liabilities, and sometimes if you have a Shopify working capital loan, it'll show that liability over here. It'll break out how you're receiving your payments. All of these things are so helpful for you as a business owner to say, okay, most of my people are using Shopify or paying cash or whatever it may be, and you can use all of these things to market towards that person or to adjust your cost per item or your price per item. Sorry, can't usually the cost unless you go back and negotiate, but that's a whole different story. But essentially, you use this information to determine the financial health of your business. So use it, lean into these systems because they're there to help you. And I love it. I love Shopify, Square for retail, all of that. There's so many great resources out there. And without knowing that it's there, you don't know what you don't know. I mean, how many times do we say that as business owners? Like, I don't know about it. So we're going to go into my favorite part of this, which is going to be growth strategies. So I work with a lot of clients one-on-one, and they're always wanting to scale. Of course, we want to scale. We want to get to $1 million. So how do we get there? I think there are some 3 key factors that I want to point out, and just hope that you can kind of take into your day-to-day business and try and see, okay, am I ready to scale this business, and what do I need to do? So the first thing you're going to see is an increased sales. Whew, you're busy, you're packaging all these orders, you're selling all these orders, you've got lines. I think you see this increased sales volumes, and as a business owner, you need to step back and say, okay, is this my busy season, or am I actually growing? Like, did I have an amazing ad, or did an influencer pick me up, or what is it that really is driving these sales? Because there is seasonality to every business. There's ups and downs. You have busy seasons, slow seasons, growing seasons, all of that, harvesting seasons. Really see what season are you in. Are you ready to scale? We're going to take a 90-day rule. So if we are seeing profit for 90 days, for 3 months in a row, we're ready to scale, right? So we're ready to take that next step, whether it be hiring a new employee, or getting a new system, or paying myself, right? Sometimes as a business owner, that's a huge thing. Can I start paying myself now? Am I making this money? Am I ready to grow? It's a 90-day rule. So if you are actually seeing profit, net profit in your business for 3 months in a row, then you know, okay, this is not just Black Friday season. This is not just year-end blowout sale. This is, we had November, December, and January, which Januaries are typically slow, but I'm still seeing this increased volume. I'm ready to take that next step. If you make permanent decisions off a temporary season, you can really hurt yourself, right? If you start absorbing all of these overhead expenses and you're not ready to keep it going, then you kind of shoot yourself in the foot, and it's just kind of can be devastating and hold yourself back as a business owner. So really use this 90-day rule. I use it with all of our clients. You can use the metrics in your systems. I know, Kent, you said you have Square. Square has the exact same metrics in there. They have a financial report as well. So if you can use them and just start to measure that growth and say, okay, yeah, this is it. I'm hitting a whole new level. I need help, or I need a new system. Start to delegate the things that you don't love to do. If as a business owner, you love to create content, or you love to go look for new products, or whatever it may be, hold on to that, delegate out the rest. Keep what you love and move forward. So the next slide, we have importance of bookkeeping, which ties directly with what we're doing, right? So this one came out a little funky, but the importance of bookkeeping, we really you need bookkeeping for lending, or for grants even. The first thing that they're going to ask you is your financial statements as a business owner. And if you have them already ready to go, you're ahead of about 75% of the pack, because a lot of business owners don't have them on hand ready to go. So having your bookkeeping already puts you so far ahead of the pack. Financial freedom is another one. Knowing where your money is going, knowing your cash flow, knowing I have 3 months worth of operating expenses on hand, or I have 2 months worth of inventory on hand. These types of things just give you that financial freedom as a business owner to know and measure the health of your business. And then the last thing, of course, is taxes, tax planning, all of that good stuff. By having correct and accurate financial statements, you can ensure you're not giving Uncle Sam a penny more than you need to. You won't want to pay any more in taxes than you need to, but also that you're not paying less, right? Some people just put some numbers on their taxes, and I don't know if y'all know this, but the IRS can come up to you up to 10 years after you file your tax return, right? So it could be 2030, and they'll say, remember this tax return you filed in 2020? well, we're going to audit it. And if you did it wrong, then you get 10 years worth of interest and penalties for anything that you underpaid on. So having accurate financial statements helps to make sure that your taxes are done correctly and that there is no IRS to come after you. The last slide that I want to go on is working capital loans. So very often we see clients take out a Clearbank or a Square or a Shopify loan, and they're wondering where is all their cash, right? So just to give like a high level of what are these working capital loans. So there are different types of loans. We have investor loans where an investor comes in, you give them like a Shark Tank style type of thing, or they'll say, I'm going to give you $50,000 for 5% of your business. And you're giving up equity and they help inject funds into your business. Traditional lending, there are loans and lines of credit where they will give you money and then you repay it back with interest or APR or something. I know LaKendra will give a lot more information on this. But then the working capital loans are a percentage of your revenue. So they'll take a portion of your sales. And with traditional lending, you will have a set monthly payment, right? So they'll say, okay, you're going to pay $3,200 a month for this. With working capital loans, it changes based on your sales. So some months you may pay $3,200. If you have the best month ever, you might be paying $12,000 back for your loans. So I don't want people to, weigh all of your options, of course, but understand that working capital loans and these Shopify, these Clearbank loans, they take a percentage of your sales and they take it before it ever hits your bank account. So they go up and down. And with that, you can't really do a lot of planning, right? We can plan and say, I hope I make $10,000 in sales this month, but if you make a lot more, they're going to take more. So it is a leakage to your cash and your cash flow. And I just think it's important to understand that piece, right? That you won't have a set monthly payment as with traditional lending. You'll have a variable payment each month. So I want to hand it over to LaKendra so she can talk more about things that you would maybe even need, like documentation for the loan. So we'll go to the next slide and let her take over.
Awesome. Thank you so much for that detailed review of financial statements. To your point, I can't stress enough how important financial statements are. And I'll tell you, as small businesses, honestly, what's even more important is that you understand the statements, right? It's really important for you to make sure that you review your statements. I always suggest that you review your statements and what they mean. What is the story behind the numbers every month? So that, like you were saying, that 90-day rule, by the time you get to month 3, you already know where you're trajecting. You know where this is headed. And you can talk about your business from a financial perspective. It's really important, just to kind of elaborate on that even more, is we meet with a lot of small businesses. And to be quite honest, the retail space, usually if we were to look at risk, retail businesses are on the higher end of the spectrum when it comes to risks, when we think about underwriting. And one of the things that can help mitigate that conversation when we're looking to lend to small businesses in the retail space, whether it's a restaurant, whether you're a maker, is really either you being very astute and being able to tell your story behind the numbers and having great numbers and great bookkeeping, or to have a partner like Krista on your team that can execute. I can't tell you how I've used her in the past, and I'm like, oh my gosh, this girl is sharp. She can tell a story, she can bend numbers, she can go back and forth and tell you what the industry averages are. That type of communication helps move loans forward. And for some of the small businesses, if you are not as savvy or not at a place where you have a partner like a Krista, making sure that you take advantage of sessions like this and the recording so you can go back and start understanding the language. I always tell people, when it comes to the lending process, it's kind of like dating. You got to make sure that the communication is fluid. Underwriters, I'll tell you, and as a banker, underwriters, we speak another language. And we usually speak a language that Krista can understand. But if I'm a business owner and I'm not savvy on the financial space, usually I'm hearing about your passion and your story, which I tell folks that's the icing on the cake. But with everything that Krista just talked about is the cake. So I need all the ingredients to be right. I need the cake to rise before we put the icing on it so that I can present you, right? Present the cake for folks to enjoy when we get to the underwriting table. So I just wanted to make sure that we talked about that a little bit more as we move forward to discuss this slide here. And forgive me, I see an error. The personal financial statements. I wanted to talk about that. Personal financial statements are important. If you have not seen one, you can Google. SBA has a few sites. If you reach out to me after this session, I can also share with you our personal financial statement. I always tell folks, you know, when you get in business, a lot of things that happen is they say, oh, I got an EIN number, I have a business, and there's a separate entity. I love what Krista said, keep it separate, right? IRS looks at your business as separate. Don't commingle personal funds in your business, right? Love that. So same thing, you have your business financials that you want to have in order, and then the personal financial statements outside of your personal tax returns, that kind of gives me a snapshot of how savvy you are with your financial portfolio. So some of the things that you're going to see on there is, you know, it's going to say the same thing like a balance sheet on the business financials. What are your assets and what are your liabilities? And then I can see what your net worth is. And when we look at your personal financial statement, some of the things that want to stand out that you want to think about is just like cash on hand, the same thing that you were talking about. Cash is king. Cash on hand, cash value life insurance. What is that, right? Any type of investments that you might have, brokerage accounts, that's going to be important. And then right below that, usually you'll see market value for real estate. And think of it in that order because liquidity is king. So the fastest I can get to cash is more profitable, right? So some of those things on a personal financial statement are key. It's really important to make sure that the business is strong, and even more to make sure that the guarantor is strong. So that is where we look at as far as the character piece that we'll talk about later on. And a lot of that stands out on your credit report or your personal financial statement. Resumes. I always tell folks, especially in the retail space, you're opening a new restaurant. The first thing we're going to ask for is your resume for everybody that's on the team, right? We want to make sure that we get the resume. Build your credibility. What associations are you a part of? What leadership roles do you have? How involved are you in this space and in this industry? And what is your experience? Have you been a sous chef? Have you been a master chef? What are you doing? You know, Kent, you are a curator of makers. You know, that's a management feature. You want to be able to make sure that you are really, really highlighting and best telling your story with some credible features on your resume. So that's always a good thing for your principals, your owners, and any key personnel that's in the business. Usually if you have like an operating manager that is essential to operate the business, you'll see that too. From a business overview, the business plan in this space is very important. You're going to always have to make sure you add financials into your business plan. So everything she talked about earlier is going to be very essential. But you want to have a solid business plan. And I tell people, you know, I remember in school, in business school, we did a business plan and it was all around marketing and it had these things. It looks good if you're trying to sell something on a shelf. But when you're talking to finance folks, so if you're looking for an investor, I think Krista mentioned it earlier, if you're looking for grants, anything that has to do with money, it's really important that you're speaking our language and you really make sure that your financial piece here in your business plan is super strong. So usually we will ask for forecasting. She talked about that too. We will ask you to forecast for at least 2 to 3 years out on your business plan. So really making sure that you have that. Here it says 5 years, but at the least it's going to be 2 to 3 years that you have to complete per SBA standards. Okay, so you want to make sure that your projected financials are in there. All of the 3 statements that Krista just talked about will request. So those were some good things that was in there as well. When we talk about the business overview, the business summary, you know, businesses older than 3 years require a business overview. So really being able to tell your story. Tell me a little bit more. If you look at the business plan, shorten it. Tell me a little bit more about your business. Who are the key players? Who are your key employees? About the management of it. And more importantly now, what's really important with COVID is in the pandemic and in this space, that was something that we had never seen before as banks. So it's going to be really important for you to really talk about the industry and also talk about the impact, the COVID impact on not just your business, but also your industry, and then relative to your business. So for the retail space, how did COVID, impact you, and how did it also impact your vendors? That's going to be really key. And then lastly, financials. We won't spend too much time here. We'll have other series throughout the Real Golden program, and we can also offer one-on-one consultations. So I'll make sure you get my information in the chat as well. But from a financials perspective, we always ask for the last 3 years business tax returns and last 2 years personal tax return. Okay, and then your financial statements, everything that Krista just talked about, and sometimes even an extra, a debt schedule if you have business debt already. Okay, but making sure that you have your year-to-date financials. I can't tell you or stress enough. Some businesses, oh, let me wait and talk to my accountant or my CPA or my tax preparer or whoever's doing the books. It's a little bit of a red flag, not too much, but a little bit of a red flag because, like I said, you should be reviewing those monthly and at the least quarterly. You don't want to be behind because it shows that maybe there's some financial red flags that we should consider. If we can go ahead to the next slide. 6 C's of credit. Going to spend just a little bit of time here. And again, later on in some of the other sessions that we do, and feel free to reach out to me a one-on-one on this. We're just going to go a high-level overview of how some of those things that we saw earlier in this slide and things you should consider when we start looking at the 6 C's of credit. This is really, really powerful. I think some folks have heard 5 C's, 6 C's, 7 C's, 5 to 7. Definitely 6 now, and keep in mind 7. There's a 7 in the Eurosphere, and that's COVID, right? So keep that one because that is going to be around for a long time when we start talking about credit. But it's really important to make sure that when you are looking at telling your story as retailers, I can't stress enough to be digestible in the sense that to be as transparent as ever. What I would say, and even Kent, it's going to be really important for you with your makers, practice telling your story. I tell my clients, write down the 6 C's of credit, and then I want you to write your credit memo for me. Because the truth of the matter is, we're going to work together and partner to perfect it, to get to the underwriter, but you can't, no one can tell your story better than you. And usually no one can tell your story on the financial side better than you or your CPA or your strategist, right? And then I'm just here to receive the information and do check boxes and say, yes, they're financially solid. So do this checklist with me. Collateral, you know, when we talk about collateral, assets that act as security. She talked about some of the things on your balance sheet. So if you have under the assets, if you have equipment, if you have, you know, your URL, if there's business valuations, say that there's some value there. You know, what does your inventory on hand look like that you have on hand right now, you haven't sold? Those type of things, that is collateral that we start looking at. One of the things that's super important is character, you know, the borrower's reputation, track record for paying debt. So 2 things that really stand out here, 2 to 3 things. This is going to be your personal financial statements. You know, we don't want to see you not having a lot of assets, but then have this crazy liability. Like I tell people all the time, start managing your business and don't go crazy and go buy a Porsche, okay? Because the Porsche is going to be super heavy on the liability sections, and that's going to be one of the things that we look at, okay? So your personal financial statement, and then we also look at your personal tax returns, right? How efficient are you with just having your tax returns? Are they done correctly? Are there some issues? Are there some things that stand out? And do they match your bookkeeping? Because I can see stories on your taxes, and sometimes the story on taxes says I don't want to pay IRS. And then I look at your financials and it says I want to get a loan. Well, they have to match. So we want to make sure that the story being told under character is right. And then the last piece of that is going to be your credit report. Make sure you're checking your credit report, and those things are going to be very important. Generally, for general rule, 680 is the low to moderate score to look at for SBA. I always say as a retailer, we always want to do high, don't ever shoot low. So if we can get you over the 7s, it's great to keep you out of the water, right? That's going to be a big thing. Capital, cash the borrower is willing to invest. Are you willing to put money into this deal, right? That's some of the things you talked about, you know, what is the money you're injecting into the business? Even in a deal, I'm going to say, hey, are you going to come in and you're going to put money into this investment of something larger? You want to have cash on hand so that later on, if that's something that you want to do, you have the ability to inject cash to say, hey, I'm investing in this transaction with you, XYZ Bank, M&T. But it's going to be really, really important to make sure that you have some skin in the game is what we talk about there. This indicates the borrower's level of seriousness, right? We want to make sure that you've been doing your homework and being prepared financially so that way this next transaction is something that will stick. We don't want to set you up for failure so that you're not able to repay. Capacity. This is everything that Carissa has talked about. You know, it measures your cash flow or your ability to pay and assesses the borrower's debt to income ratio. We can get into a lot of this weeds in some other further sessions, but everything that Carissa talked to you about today, if you can make sure those things are solid, then we can spend a lot of time in capacity because capacity will make or break the deal. So we really want to make sure that the capacity is there, and that is all in your bookkeeping. That is all in your strategy. And to be quite honest, I tell a lot of retailers, if you want to invest in something other than inventory, invest in a great partner like a Carissa. Okay, so that they can help you forecast, they can help you plan and strategize so that you're building capacity within the business. Conditions, quickly, the purpose of the loans. You know, what's going on? Why are you looking to borrow right now? Market and economic conditions. You know, what is going on in the industry? There's a demand for manufacturing, and we want to do it here. So we're creating this space for makers of manufacturing, and that is the trend. And so they want to start, you know, pushing funds into this industry. That is a condition that we want to talk about, right? And you want to be able to tell that story and not just tell the story, but guide us as to what credible sources you can do. Because to be quite honest with you, on the back end, I have software that can help tell me from an industry, from all NAICS code, major NAICS code, what's going on in your industry. And as an owner, you want to be able to have that same astute knowledge of the industry so that way you can help tell us the condition. Carissa has made and broke and reminded us to go back and look at some fine print on some things because she knows her industry, and that's why she's here today in the retail space. So I can't stress it again. If you don't know, are your books and your numbers and your ratios, are they in line with your industry? So you want to have a good partner. Competency. This really is the business knowledge and experience of the owner. So we talked about some of that before with your resume. You really, really, really want to make sure that you can show that you know this business. You are an expert in your space. You stay abreast of government relations, policy, and all the things that impact your business. And so that experience and your business knowledge is going to be key to help push that deal once all of these other things, the fundamental things, are strong. So I'll go ahead to the next slide as we look to start wrapping this up for today. So a few things that I think that are really important before we start reviewing today's session is making sure you do your homework on your industry. Really, really important. If there's associations, if there are support groups, or if there's sites that you can use that you can always register to for the newsletter, stay abreast of your industry. A lot of folks just concentrate on the regional. That is a condition. We look at the industry. You want to make sure that you look at the industry and where things are headed, and you can speak to the things that are going on differently in your region and how that's impacting your business. Know your numbers. You got to know your numbers. How do they compare to the industry averages? That's super, super, super important, okay? Making sure you know your numbers, but what do they mean? And how do they fare up for your industry? The next is be transparent. Listen, I tell people all the time, tell me what's on your credit report before I pull it, okay? And once I get it to the underwriter, I don't pull your credit. So once I give it to the underwriter and I've told this great story of all that you're doing, and then they say, but Kendra, wait a minute. They have a bankruptcy or they have a foreclosure. Life happens, nothing wrong with that. But the key thing is to make sure that you're winning. So if you could give me the good, bad, and the ugly up front, I can tell you up front if I could be an advocate at the table for you. So you want to have a great partner where you can be transparent and have those conversations. Last but not least, who is much more important than how much, right? You can be making $3 million, but the who of your business is your balance sheets and those and your other reports. So I tell folks, you went to, when we were looking at the income statement, I was doing a session last night. When you look on your tax return, everybody loves to say the sales. I had 3 million in sales. And then guess what? At the underwriting table, we jump right down to net income. So when she had that example earlier and it was negative, and automatically there's a story to be told, but that's not looking good. So you want to make sure that the meat and potatoes is there. And who are doing your taxes? You know, those who's, the who is your partner, who is your banker, who is the guarantor, and who is the business is much more important than how much you're making. We can help you get there with the right partnerships. So if you have any questions, please feel free to put those in the chat. Hopefully that information was a little bit helpful to you today. And in summary, when we look at things, you know, and before we open it up to everybody, we want to make sure that you guys have a sense of understanding of what financial reports you should be looking at, right? Which ones should you know as a business owner, and making sure that you're looking at those often. And how do you tell the story and come up with a plan and a strategy? Numbers are only good if you work them, okay? Inventory versus cost of goods sold. I think Krista did an amazing job on that. We had the e-commerce strategies, importance of bookkeeping, and then I just went over a little bit around fundamentals for capital financing. So hopefully that was a quick snippet. I always tell people it sounds like an overwhelming session, a lot in such a short period of time, but this is recorded. It's for your good. Please file it. It will be on the website. Krista, did I miss anything while we sum it up before we open up for questions?
That was great. That was great. I do see we have one question I wanted to do for Kent. He asked, tracking inventory monthly, not currently using software, what do you recommend? Now, there's a difference between an inventory system and an inventory software. As long as you have a system, which could be in Excel, it could be a piece of paper, as long as you have a system working for you, that's the most important part. Now, softwares, I would definitely recommend going with whatever point of sales you're using, right? They're 9 times out of 10, they're going to have some sort of Square has a Square for retail, which has an inventory tracking system. Shopinventory, they're Shopify, all of these have inventory tracking systems. One of my favorite bigger inventory systems for smaller businesses is DEAR, D-E-A-R, DEAR systems. It's a great all-encompassing system. It will pull from different platforms and hold all of your inventory in one space. So if you are looking for kind of a more robust inventory system, I would recommend DEAR systems.
Can you also put that in the chat for them?
Absolutely, absolutely.
That's awesome. Ken, did you have, or Joy, did you guys have any questions for us?
I do want to say, while we're waiting for any questions to come through, something really important that you said, Lakendra, is that you look at previous year's tax returns for lending. And when I work with clients, one of the first things I ask them when we start working together is, what are your future goals, right? If you're trying to buy a house, if you're trying to get some lending in the future because you want to grow your business, you want to get SBA accredited, I make sure that we're driving your financials to make sure we're, like you said, you're going to look at profit. You're not going to look at sales. So how do we make sure that you're showing profit at the end of the year and that your tax returns reflect that it is growing? Because I think there's like a 2-year average. And you also take into consideration current years. So, you know, working with the right professional, well, they should help shape that with you in your strategies and in your financial statements. And I know they're going to look at your tax returns, and I know they're going to look at your financial statements. So how can we shape them and use strategies to get to that point?
Mm-hmm. And to your point, Krista, before we turn it over to Karen, it's really important to start doing that now. I talked about 3 years. So imagine, do you want to spend 3 years doing the same thing? So no. So that means that today is where you start to get lending ready. Every business at some point in a successful business cycle, you will need credit and access to capital. It is the nature of the beast of the world of commerce, business, and just finance. So start working on that now, prepare now, have good partners now, and really start doing simulations to practice on what it needs, what you need, the documentation necessary, so that by the time you get there, you're well positioned to get the funding. So thank you, Krista, so much. I appreciate you. I appreciate what you do for our small businesses. Corinne, I'll turn it over to you.
Thank you so much, Lakendra and Krista, both of you, for sharing your knowledge. I really appreciate your energy and how accessible and compelling you made the content today. I also want to thank everyone in the audience for joining us. While you're fine-tuning your financial expertise, be sure to follow us on social media. It's Golden Triangle DC on Instagram and Facebook, and Golden Tri DC on Twitter. And then as I know, I'm personally excited for the holiday season that's approaching and all the small business support that I can provide as I'm buying gifts. So we encourage everyone to support their fellow small businesses, entrepreneurs, makers, and creatives in the Golden Triangle community. Thank you so much for joining us, and enjoy the rest of your day. Thanks, everyone.